Troubled Chinese property developer Country Garden avoided default this week as it made interest payments on bonds hours ahead of a grace period deadline. Last week, the company reported a record nearly $7 billion loss in the first half of the year. Now, Country Garden has become a symbol of the crisis on the Chinese real estate sector. But even as the central government rolled out a raft of measures to bolster the market, many consumers say it is still too expensive to buy homes.
Here in Shanghai, homes stand empty and entire buildings incomplete. That's because many property builders have run out of cash, but still, real estate remains expensive. I wouldn't want to buy a house right now. To be honest, no matter what policies come out, it won't reach the point where ordinary people would want to buy a house. On Friday, Beijing did start rolling out measures to try to encourage people to buy, including lowering mortgage rates for first-time homebuyers. But analysts aren't sure if lower rates will put homes within reach of average people, even though sales are crucial to the health of the market.
So I would expect there will be a stabilization for the property sales and hence stabilization for property price. But then if the sales continue to decline or do not have material impact from the policy easing, then we may continue to see the price decline here.
China has had an uneven economic recovery since it reopened post-COVID, and the property sector has seen massive debt problems and been on the decline since 2021. Real estate contributes roughly a quarter to the Chinese economy. But it's been a headache for years, as before Country Garden, there were similar default concerns around developer Evergrande. But prices haven't declined as much as many potential homebuyers would like. In Shanghai, property is at least 50% higher than before the pandemic began. A price cool down or a housing implosion. The sector is walking a thin line as interest payments for indebted developers continues to rise sky high.
For more, let's cross over to Taipei and DW correspondent Yuqin Li. Yuqin, has this payment, this pulling back from the brink of default, changed anything among investors in the way they look at Country Garden?
Well, what I can tell you is that its shares surged a little bit right after the company's state of the immediate crisis. But most investors are staying dubious about the prospect, thinking that Country Garden, one of China's biggest real estate developers, is far from getting back on track. Lately, some Chinese media also reported from anonymous sources that the company is now seeking to postpone the repayment of 7 additional loans following one postponement it managed to get a few days ago. So the fact that Country Garden avoided default on 2 bonds this week has fueled optimism indeed among some investors, but whether the firm is able to escape the crisis is still an ongoing development many are keeping an eye on.
So no major change in attitude towards Country Garden here. What will have to happen for the cash-strapped company to continue making these payments?
As I said, Country Garden is reportedly trying to postpone more repayments of debts. It just shows that the company is trying to buy more time for itself. But whether or not the proposal fell through, there's certainly more to be done to meet next few deadlines, including trying to deliver homes to buyers on time, because quite a huge amount of its debts come from pre-sale deposit from home buyers. So experts suggest that once they sort out the issue with pre-sales, their debt won't seem so massive. But of course, all these won't be easy because last week the property giant also reported a record high loss for the first half of the year. So, making a few crucial payments doesn't mean that Country Garden is now out of the woods.
Right. So what would a default of Country Garden, which is still an option, mean for the Chinese property sector as a whole?
It would be a huge red flag for a potential collapse of the Chinese real estate market. because Country Garden in the past was considered an exemplar in the sector, having a track record of strong financial performance. So many observers said if Country Garden falls, it could indicate that a bigger financial storm may be approaching the Chinese property sector and can trigger a domino effect. Also, a Chinese businessman in exile also told our news team in Taipei that there will be no rebound in Chinese property market because the home ownership rate in China is one of the highest in the world. If the real estate market goes down, Chinese homeowners will be seeing their wealth shrinking. In that case, he believed it is nearly impossible for the consumption rate to revive.
A lot seems to be depending on the Chinese consumer here and the way that people should be spending, but they aren't spending right now. China's biggest banks have been lowering lending rates and lawmakers have been easing restrictions on getting loans. Now, is addressing this crisis from the monetary side likely to yield results?
Well, the Chinese media are quoting local economists in a confident tone that these policies will effectively boost market confidence and stimulate consumption and prevent a serious financial crisis. But so far, it hasn't really done real estate companies much good. And economists outside China are thinking quite differently. So many Chinese people also are still commenting online that they prefer saving to spending. And according to our correspondent in Hong Kong, the debt crisis of Country Garden has extended to foreign countries like Malaysia because the company has many unfinished projects around the world and buyers are accusing the company of failing to complete the deal. So we can see that these policies are actually not having a strong effect right now.
Now, we have to keep in mind that the savings rate in China is pretty high compared to other countries in the world. Now, domestic demand within China remains weak and house prices are on the slide in smaller cities in China in particular. What do experts think the government should do about that?
Well, what the Chinese government has already done is to allow more home buyers to apply for lower down payments and mortgage rates. But most economists outside China believe if the government wants to turn the tide, a more drastic and holistic policy is urgently needed. For example, an expert I interviewed said there is an urgent need for China to increase its domestic consumption by, for example, creating a more comprehensive social welfare net because the country's economy has long been relying too much on exports and investment-led growth. And actually, some of the economists also believe that it's not at all mysterious about what China needs to do to restore confidence in the market, but when its political interests are factored in, the country can become hesitant to make some of these changes.
DW correspondent Yuqin Li in Taipei. Yuqin, thank you very much.